implementation of regulation and general policy to financial inclusion. And generally, we had in mind very traditional, now we can say already traditional, it looks funny for me, but really traditional thing like electronic money and mobile payments. But now we have two brave guys. One is Jonathan Dharmapalan. He is sitting in the center. And another is his supporter, Rob. He is sitting somewhere. I don't see him, but he is here, or he is here for sure. And they think it up, the very simple thing, just small revolution and electronic payment. So they decided to provide a technical solution or business model or idea or everything together, not for private company, not for multinational payment system, but for central banks. So we are welcoming Jonathan for his speech, and starting from this minutes, the world of payment never will be the same. Please, Jonathan.
Thank you, Victor. Thank you, everyone. Let me start by thanking Banco de Mozambique for having us here today. I'd like to thank AFI for giving us an opportunity to speak. This project I'm going to speak about has been several years in the making, and I have to tell you that we don't speak in public forums. We have spent our time talking only to central banks. And since this forum is primarily made up of central banks, we agreed that we would come here and talk to you about an incredible possibility, a possibility that as money becomes digital, central banks have an opportunity to issue that money as digital legal tender. I will only spend about 15, 20 minutes talking. I really want to give you and Victor an opportunity to ask questions. And I can't tell you what a great honor it is to be up here. We have spent the last 10 years talking about enabling digital access. We've talked about mobile money. We've talked about mobile financial services, digital financial services, and enabling regulation to make all of this possible. And there has been tremendous work done by mobile operators, banks enabling mobile banking. But very quietly in the background, some of us started thinking about this: cash. Cash is, interestingly, an old form of financial inclusion. I know it's become a little old-fashioned talking about cash, and today, for demonstration purposes and out of respect for our hosts, I will hold up Medicash. This Medicash has actually made some pretty amazing things possible in the last century. One, it has made it possible for countries to define their financial boundary with a sovereign currency. So in Mozambique, it is a metical. In India, it's a rupee. In the US, it's a US dollar. In Mexico, it's a peso. This sovereign nature of cash has actually made it possible for the entire population to handle it, to make transactions in it, and to trust it. And that trust comes from the trust they place in the central bank. In Mozambique, it's a 40-year history of Banco de Mozambique. So when we started thinking about this instrument called cash or currency, we wondered what would happen as our digital revolution takes cash into the digital realm. And the answer to that question came when we brought a research and development group together, made up of engineers, made up of scientists, and we asked them to solve that problem. And we have solved the problem. We realized that it is possible to create a central bank issued digital currency that is issued and circulated exclusively by the central bank of the nation that will work over any digital platform. This was a tremendous breakthrough for us. So I'm going to tell you a little bit about how it works first before talking, hopefully into the conversation, about how it impacts financial inclusion. So it's a digital currency for a digital world. Central bank issued digital currency. You could also call it central bank issued digital legal tender. The same thing as paper cash. So we looked at this very interesting instrument. Again, Banco de Mozambique, I'm using your instrument for illustrative purposes only. And we realized that this instrument has evolved over time to become the most secure piece of paper in the world. And central banks control the issuance and the distribution of this security instrument. And as we unraveled this security instrument, we realized that it is a piece of cotton-based paper on which various security elements have been layered and bound together in such a way that it cannot be taken apart. And it allows the central bank to govern this with very simple regulations. And the regulations say only the central bank can create it, only the central bank can destroy it, and it is legal tender. So we said, can we do the same thing digitally? Well, it turns out that the technology exists to do just that. Again, for demonstration purposes, we realized that you can take a digital message, wrap it in multiple forms of security. So, whereas you have a watermark on paper, you can put a digital watermark on a digital instrument. You can add to it a digital signature. You can add to it a digital serial number. And by layering these together and binding them into a single instrument, you have essentially created a central bank issued digital currency. That then creates the birth of a digital metical. If Banco de Mozambique issued a digital instrument, they can now deem it digital legal tender. This digital currency now has the ability to operate under the same governing principles of paper currency. Central bank issued, legal tender. Very simple regulation. Because of very simple regulation, anyone can handle it. It is in many ways an instrument of financial inclusion. Adults, youth, men, women, anyone can handle this digital legal tender. And an age-old problem in the digital world that we think of as interoperability gets essentially solved. Today, with mobile money, we have made it possible for vast populations to participate in mobile commerce. If the central bank is able to issue a digital legal tender, that digital legal tender inserted into each of these systems, for example, a digital metical inserted into Vodacom, becomes digital legal tender that can then be distributed using these mobile systems to the public as a whole. Not only can you do that, but because a metical is a metical is a metical, you have solved the age-old problem of interoperability. Interconnectivity is a technical problem to solve. Interoperability is a legal doctrine problem to solve. By applying a simple legal doctrine that says it's legal tender, central banks can essentially solve the digital interoperability problem. So what does the future look like? Today, central banks issue paper and coin currency as legal tender. So base money, also sometimes called M0, is the sum of the value of paper and coin currency. As we move to the digital world, a secured digital instrument issued exclusively by the central bank allows us to participate in paper notes, coin currency, and digital currency. So M0 is controlled by the central bank and known by the central bank. And the sum of the three will be our M0 going forward. Now, there are people who predict that paper currency will go away or coins will go away. We don't know that, and frankly, we don't necessarily even think that. But we do believe that by digitizing the currency, the central bank can invite all digitally enabled public. They can invite banks, commercial banks. They can invite mobile money operators, digital financial service providers, and the wider public to participate in base money in paper, coin, and digital form. Now, I'm sure a lot of you are thinking, how do you actually do that? If you're interested, we'll be happy to share all the details with you, but I will leave you with one interesting innovation. And that interesting innovation happens to be a digital currency production engine. This digital currency production engine is able to create this digital currency on a completely offline fashion. This device will be controlled by the central bank. It'll be kept in a vault. It will not be connected to the network, and it will only become operational when a central bank chooses to put it into operation. This is a major innovation and a major breakthrough that is now being actively piloted around the world. And the requirements for building this has come to this group of researchers and developers from approximately 30 central banks who have provided input as to how this should work. And as this is moving from pilot into reality, we thought this was a wonderful opportunity to share this breakthrough with you. Just a note of historical precedence. I'd like to talk about what happened in what we call the antebellum era. About 150 years ago, when carrying gold coins and silver coins became impractical, and I'll use the US as an example, and security printing became popular, various entities started producing their version of paper money. So, for example, in the US, the Bank of Augusta, the Kalamazoo Railroad Company, the Franklin Silk Company, all produced paper money. Most of them even called it a dollar. Along comes the central bank, the Treasury, and the Federal Reserve System. The biggest problem with all of these monies, it turns out, was a lack of interoperability. With the introduction of the central bank was able to unify this new technology called security printing into a single unit. They gave it legal tender status, they gave it legal identity, and they unified it into a national currency. In the US, it's a US dollar. In Mozambique, it's a Metical. And with that, they solved a multitude of problems, including the age-old problem of interoperability. Now, with new technology, we have started to see mobile and e-money companies who are serving a tremendous purpose by reaching the wider public. To solve the problem of interoperability and to create a common standard upon which the whole nation can operate, the central banks can now issue a digital legal tender. With that, I'll hand this back to Victor, and I'm sure the floor is open for questions.
Okay. Thank you very much. Very interesting. Not interesting is the wrong word. Very presentation.
Thank you.
So I would like to ask you a very short question. More than 15 years ago, it was at least two companies which I know. First one was trying to make a business issuing some kinds of called digital tokens or something like that. And they has got very strong relation with Bank of Scotland, with Citibank, with some central bank. But now the name is forgotten and nobody knows about DigiCash. It's the first case. Second case, it was a very tiny company, just a few guys which wanted to mine a digital token in exchange from one PDA to another. Now they have not got any tokens, but everybody knows about the company. The name is PayPal.
Yes.
So what has been changed in 15 years? What can make your idea successful right now? Why is very moment?
Well, timing sometimes is everything. 15 years ago, when DigiCash as an idea came up, the distribution networks that we see today didn't exist. These magical distribution networks that we think of as the internet and that we think of as mobile systems did not exist. We did not have 80, 90, 100% of the population having direct access. And so what DigiCash did was they had to build both the system and the digital instrument. In our modern case, the systems already exist. The mobile money operators have put the systems out there. They've connected to the public. The internet is widely available. What we are talking about is creating the instrument that will then operate across these systems, leverage those systems, and giving that instrument that base trust that only the central bank can give it. So the possibility of bringing the central bank's ability to issue a legal tender and mobile operators and banks and internet service providers like PayPal to distribute it is what makes it very much a reality and also makes it a reality for the wider public. So when we talk about innovation enabling inclusion, that would not have been possible if these networks had not been built out.
Okay, I just remember yesterday words of Alfred that always exists the very moment to start something. Okay, great. I'm sure you have some questions, so please here.
Yeah, Samar here. Amazing. I mean, I'm completely mesmerized, frankly speaking, the way you presented it. The questions, there are a couple of questions. One is like, I still don't understand how would that work when the central banks would like to do their monetary policy expansion or contraction. How would that operate under this one? And secondly, I still don't understand how would it be possible that no one else would be able to issue this money, because you see, I don't know whether it's something confidential in your business trick or not, but the point is that when the mobile money can be created by a cellular company, you see, like in case of where we have got this mobile, you see, money operators, how would that be controlled? So these are a couple of questions. Thank you.
Thank you. I won't delve into the technology, but I will talk a little bit about the principle of how it's done. What we have been able to do is create a digital object with a quantum size associated with it. And if the quantum size happens to be a value, so let's say the central bank issues or creates 1 million Metacash, it is possible at all times to sum the units that are in circulation to have a very high degree of confidence, if not a perfect degree of confidence, that only 1 million subunits of that original Metacash that was issued is circulating. So there is a quantitative effort that takes place in real time to give the central bank confidence that only what was created is operating. At some point, if you are a central bank, we'll be happy to show you how that algorithm works. But that was essentially the breakthrough.
Okay, so next question in the middle.
As Mr. Hasnain said, this is very exciting. My question is, as you were explaining the principle behind this, I was wondering, the hacker in me, whether I could add a few zeros to the one that you're putting it out there. So how are you in the counterfeiting world that is there? Similarly, a counterfeiting digital world will be there. How will you ensure the security of this?
Yes. So, first of all, that is a given. The security has to work. If it doesn't work, the principles can't be held together to make it legal tender. You understand that. But the essential breakthrough is that by the central bank imposing the quantitative value and then enabling what is an operating system inside of all of these payment systems, you're able to actually know that zeros are not being added to it. And this particular unit, by the way, morphs every time it transacts. So for example, if you have 1,000 and it happens to have a serial number 1234, I'm simplifying it, and you spend 500, that 1,000 morphs into two 500s that have to quantitatively add up to the original 1,000, and the two new ones have a new identity. And that new identity comes actually from the central bank. And we made it possible to do that in a decentralized fashion. So yes, the security is a given. It has to work. We've tested it, we've piloted it, central banks have seen it, and that's why we are able to confidently say that we've created the possibility of a central bank digital currency.
Next question is the middle.
Thank you, Robin. Well, can you clarify, please, more about how the government can manage the inflation deflation since there is no banknote? This is the first question. The second, banknote is a symbol of existence of the country. Do the governments will accept your idea? Thank you.
Thank you. Yes, so I started the conversation by saying that currency itself is not a thing. Currency is a legal doctrine. The existence of a currency is only enabled by the law of the country saying that an entity in the country, which happens to be the central bank, is the sole issuer of the banknote, of the coins, and now the digital currency. That digital currency has to have the imprint, a digital imprint, and or the digital DNA that we call it, of the bank itself and of the country. And it is a unique instrumental object. Without going into the details of how you create a digital object, the fact that it's created as an object makes it a part of a whole. So just like you would print a stack of paper currencies and you'll stamp a bag of coins, the central bank is able to print really a block of digital currency. From a monetary policy perspective, their currency in circulation is the sum of the stack of paper, the bag of coins, and the block of digital currency. And their ability to add that stack of paper is not very good because they can't see it all the time. The coins that they stamp disappear at a rate of 10% a year and they have to keep stamping it. But digital currency doesn't disappear. because it is always visible to them. So they're able to say that, that the block they created exists.
In the front, please, Loretta.
Thank you. Loretta Michaels, U.S. Treasury. Well, I have to say, we are very excited by what Jonathan is up to. It's been very clear to those of us at Treasury watching this space that there are two areas that we feel strongly about. One is that digital is clearly the future, but we want currencies to be regulated and not a wild west of unregulated currencies. And so it was quite timely for us to meet Jonathan and hear his thoughts. So we've been very excited by that. And so I had a couple of questions for you. One is, how easy is it for the marketplace to adjust itself to accept digital currency? So I'm thinking merchant acceptance, POS systems, ATMs, et cetera, because even if the regulator could turn it on overnight, there needs to be a marketplace use for it. And then the other question, and this is, I guess, a bigger, more esoteric question, but what do you think are the implications for cross-border economic relationships for this? Thank you.
Thank you, Loretta. If you would put my slides up again, I will quickly flip to a slide when they come up. If I might stand up, because I too get nervous sitting down. So this ties a little bit to Victor's question, what is different now than when there was DigiCash? What is different now is that we have mobile money, and that the marketplace and the public have accepted this capability, and they are using it in tremendous amounts. They're using it for remittances, they're sending it to their villages, they're using it to buy bananas. It is being transacted already. So electronic money is working, and it's working incredibly well. What we have done is enable the central bank to create a digital currency and do a one-time swap of digital currency for mobile money. By doing that one-time swap, they will insert their legal sovereign currency into the mobile money system. Once it's in there, there is no more privately issued e-tokens flying around. There are only currency units issued by the central bank. So from a public perspective that is already used to transacting on PayPal, transacting on M-Pesa, transacting on Airtel Money, the use case doesn't change. They still do the same things they do. The only difference is the ultimate trust of the instrument that they're using comes to them from the central bank. So it was a combination of putting this philosophy together with technology that can actually do that one-time swap in the system. Let me jump to that second question. Our first goal was to make it possible for nations to secure their electronic money universe. Until you're able to secure your universe and say, we have produced so many rupees digitally, we have produced so many ringgit digitally, we have produced so many pesos digitally, trying to solve the cross-border problem was, to some effect, a waste of time. But once you're able to secure these digitally, the cross-border remittances should work just like they do today with paper currency, through the existing banking systems, through the existing FX systems. So we left that solution to people who already solved that problem now.
Jonathan, you see, coming back to the question of the madam, you see again, the issue is probably bigger than that, because you know that most of the countries, I mean not most of the countries, a lot of countries do not have capital account convertibility. Their currencies are not tradable, you see, outside their own countries. So to what extent, I mean, how would the central bank or, I mean, anyone be able to restrict movement of that currency from the borders of your country to another country? You see, the one that you mentioned about the remittances, small remittances, these are coming from those countries which have that capital account convertibility from where the money could come. But from the countries who have those capital account convertibility and their local currency convertibility, how would you stop that?
Our intentions are neither to enable nor stop it. Our intentions are to enable the central banks to issue a digital form of their currency. I will address this capital account convertibility issue just very quickly. For nations that cannot do direct capital account convertibility from their currency to another currency, it has to go through some kind of reserve, a reserve currency. So you have to convert to the US dollar or the British pound before you convert back, because those conversion rates are at least known and set by the central banks. That will still have to happen. There is no possibility for you to remit an account in Mozambique Meticash in an account in Ringgit directly in Malaysia. That's a problem we haven't even thought to address, to tell you the truth. We've just secured the Meticash should the Mozambique central bank choose to issue digital currency digitally. So cross-border, we can go offline on some solutions, but this doesn't solve that problem.
Okay, great. Lady in green. Yes, long-waiting lady in green in the audience, please.
Thank you very much. And thank you for the presentation. Very enlightening, and is a new challenge, I'll say. Straight to my question, you had talked about the swap, essentially, from mobile money to digital currency. And I'm just wondering, at the consumer level, individuals like you and I in this room and the larger markets in financial inclusion that we serve, how will they use this currency? Now, talking about infrastructure, because for the normal cash, is a straightforward transaction. For mobile money, we know there's an acceptance device in the middle. Is it a mobile phone? If it's a transfer, you know exactly what it is. So I'm wondering what the acceptance device will be in this case. And then beyond that, we have a broader financial inclusion challenge that we are still trying to address as a network, the issue of access. So I don't know how that ties into digital currency. From where we are, how do we get to where we want to go? Thank you.
I didn't get the last word. Was that visual access?
No, the last point is in terms of access.
Digital access.
Not digital, well, digital access to an extent, because right now we are still struggling with the issue of acceptance points.
Yes.
Yes, ATMs, the traditional channels and branchless banking. But to now bring on board digital currency again, are we talking about an additional access points, or is an upgrade of the current access channels?
Yes.
Yeah.
So to access physical currency, you need physical access. And we've talked about the inefficiency of physical access, having to go somewhere to pay somebody. That is a problem of physical access. We take it for granted, but it exists. Digital currency works essentially the same way. You have to have digital access. Some form of electronic access is a must. But if the digital currency is secured effectively by a central bank, then the simplest form of digital access should work. So today, mobile money is transacted using SMS type service. Digital currency will work the same way. The public can send and receive digital currency, digital money, through a mobile money operator using SMS. What they can be confident of is what they sent came as a subset of a unit created by the central bank. Now you'd say, how do they know? How they know is they either trust the mobile operator, who can check that that unit was created by the central bank, or their device, especially a smart, secure phone, can test that unit to see that the central bank signature and serial number are stamped on it.
Please, question in the 1, 2, 3, 5, 5th row.
Well, I'm Stan from Brazil, and from what I understood from your presentation, I see that we are eliminating the trust accounts that e-money issuers today, they have in commercial banks. And what I'm thinking is, won't we have a new war between banks, traditional banks, and these e-money issuers with this new digital currency issued by the central bank? Because then the commercial banks will lose all these trust accounts.
Okay, I'll talk about the trust accounts. The trust accounts are a temporary measure that we have put into place to enable mobile money and to protect the public. And it made a lot of sense. What happens to the trust account or the escrow account or whatever we call it in different countries is that it goes back to the central bank. So what happens is the central bank issues digital currency in exchange for the money that's sitting in the trust account. So the trust account becomes exactly like this. This is a trust account with the central bank. One other little point I want to make, and this also earns the central bank its one major source of income, seigniorage. Digital currency will continue to earn the central bank seigniorage. Okay? What happens to the commercial banks? Well, it turns out that this currency is what enabled commercial banks to exist in the first place. Digital currency will flow through commercial banks exactly like physical currency flows through commercial banks. In fact, commercial banks spend an inordinate amount of time and money counting this stuff and picking out the dirty ones and sending it back to the central bank and hiring security services to move this stuff around. They can handle it in digital currency. The other brick and mortar problem we talked about the public needing to go to a commercial bank with a bag of money to deposit it, goes away. Equity Bank talked today about enabling digital transactions. People will be able to deposit and withdraw digital currency without having to go to a branch. It is possible. So commercial banks do not get cut out. In fact, they should thrive. They should thrive because they'll have better access to the very edge of the population digitally.
So we have a time for one short and last question. Gentleman and lady, I think lady. You. Sorry for that, but you will have an option to ask a question after, I'm sure, okay. I bet. No, I mean you ask question and gentleman, unfortunately.
Thank you. My name is Denise, I'm from the World Bank. Very interesting, I'm very intrigued. I've heard a little bit about this before and I agree with Loretta, I think this is the future, digital is the future and also for central banks. I'm wondering from the work that you've been doing and talking to the central banks, I have few questions, but they are very easy. How many of them are already actually trying to implement or planning to implement something like this? And do you see where is the source of resistance? Do you see any source of resistance? And last, I'm curious about what is the level of comfort with central banks about the channels for distribution, because the channels is third parties, right? And nowadays they just need to transport the cash, which is something very palpable. But then with digital currency, they will need to trust the e-money distribution channels and to get to the device in the hands of the consumer. So just these questions, thank you.
Well, I don't want to speak to a lot of the central banks here who we have actually met with, so we have some friends in the audience. But it is our perception and it is our belief that this is a slow, steady march. We have been engaging with, let's put it this way, we have had a 100% hit rate with central banks. So when we call them and tell them this is possible, they say, please come. And the only reason we are limited to 30 is because I just simply can't travel anymore. So the reception has been tremendous. The working through the details as to how to adopt this through their normal processes and getting the multiple organizations within the central bank to understand it and cross-pollinate has taken some time. Because this touches every part of the central bank. The currency department is involved, payment systems is involved, banking is involved, and I haven't showed you the part about research and policy making. They're involved. Every part of the central bank is involved. And bringing them together, giving them a chance to understand it, and moving it along is a slow, steady process. Of the 30 central banks, I would suggest that about a half of them are on the verge of making serious decisions about this. They have been watching our pilots, understanding how it works, giving us their requirements so we can keep refining this thing. And one major requirement was the answer to your last question, which is, can we have a dashboard to see what's happening in our distribution channel? So we've actually built a dashboard so a central bank in real time can watch the movement within their distribution channel. And because it's digital, the movement of these objects is immensely watchable. It's very transparent.
Unfortunately, we don't have
We'll
any.
give him. We
I had one
promised him a
quick question, which is
Okay.
sort of a
Very
follow-up to
short
the last
one.
Yeah. I did have a chat with Jonathan very briefly. Sorry, my name is Musa Penda from Bank of Zambia. And this whole agenda basically presupposes that certain conditions are in place. You did talk about security and access to technology. I think you're also aware that the use of cash in Africa is very high. So I'd be interested to know, firstly, what time frame would you see something like this happening in, say, in an African country? And then secondly, for something like this, I think you do need to have some sort of pilot. So I'm interested to know, among the countries you referred to, are these developing countries or developed countries that want to kickstart this work? Thank you.
Thank you. It takes us a little bit back to how we were formed in the first place. We are a mission-driven organization that looked at a singular way to address problems we saw were going to come up in the creation of mobile money and e-money systems. We were trying to solve it in a singular way. And as a result, we targeted and tried to understand countries that had a high use of physical cash, low banking penetration, and high mobile penetration. As a result, we are concentrated very heavily in our work in and around Africa, in and around Southeast Asia and South Asia, and in several countries in Latin America. We actually think that the Global South will leapfrog the developed markets in taking advantage of digitization, mostly because of low banking penetration, high physical cash use, which is a very expensive instrument to produce and maintain, and high mobile penetration. So I hope that answers your question.
Okay.
I am, in the respect of time, I am here till Saturday morning. There is no topic I like talking about more than this topic. So if you find me awake anywhere, please stop me. I have two colleagues here, Mr. Ford, who's our Chief Operating Officer, and Mr. Sagala, who is our President for Africa. Stop any of us, and we'll be happy to talk about it. If I'm asleep, wake me up. I'll be happy to talk about it then also.
Okay, so thank you very much.
Thank you, Victor. Thank you, everyone.
Nice session. Okay.